Welcome to Illuminati Silver. We're telling the truth about silver. Today is Sunday, the 27th of April 2025, and we're providing our regular weekly update for the weekend in the 25th of April. This past week saw gold hit all-time highs yet again, though the price closed down for the week, while silver prices touched $34, but like gold, fell back again, though remained in positive territory. What happened and what is the outlook for this coming week? Well, let's take a look. Now, before we look at gold and silver, a request that in order to help this channel reach more people, we'd appreciate it if you give this video a thumbs up, subscribe, and press that all-important bell sign. Let's now look at how markets performed and closed. Gold fell $12 last week, falling from $3,332 to $3,320. Having been as high as $3,501, yes, it breached $3,500 at one point, and a low of $3,262, a fall of 0.4%. Gold spread between high and low was a very unusually high $239. Last week, we predicted gold would trade between 3,175 and 3,450, and although it operated within these levels for 4 days last week, the top end was surpassed on Tuesday, but by Wednesday had fallen back into line. In sterling terms, gold fell £12, closing at £2,498. And in euros, it fell €7, closing at €2,924. Silver rose 34 cents, rising from $32.79 to $33.13. Having been as high as $34.07, that's so above $34, and a low of $32.16, a rise of 1%. The difference between its high and low was $1.91. Last week, we predicted silver would trade between $31.75 and $34.50, and this is exactly what it did. In sterling terms, silver rose 34 pence, closing at £24.95, and in euros it closed at 29.23 euros, that's up 0.49 euros. The gold to silver ratio fell from 101.6 to 1 to 100.2 to 1, so still holding at that 100 level. Did you, by the way, give this video a thumbs up? If you didn't, would you please now do so, and most certainly subscribe, even if perhaps you don't want to give it a thumbs up quite yet? We'd be very grateful if you do. Bitcoin is up nearly $10,000 and is currently standing at $94,000. Equities were higher this week, a lot of them gaining most of what it lost last week, but not quite. Dow Jones closed up 971 points at 40,113, the S&P up 243 at 5,525, and the Nasdaq Composite up 1,096 at 17,382. The FTSE index is continuing on its rise, up 140 points at 8,415. Oils were marginally lower, mainly due to the increased strength of the dollar. Brent crude closed down $1.09 at $66.87, and WTI crude closed down $1.66 at $63.02. The dollar index closed up 0.3 points on the week, though it was higher earlier in the week, at 99.5. Looking at economic data last week, the only real area worthy of attention were the worsening report on US leading economic indicators, falling further in March from minus 0.2% to minus 0.7%. Flash services PMIs being 3 points lower in March than compared with February, and new home sales rising from 674,000 the previous month to 724,000. Though we probably would expect this in the spring moving into the summer. The most significant change was seen in durable goods orders, rising from 0.9% in February to a massive 9.2% in March, against expectations of 1.6%. But before you get too carried away, most of this rise has been explained as Boeing contracts and tariff front-running, in other words, before the tariffs take place, people buying goods, which won't continue, especially if the trade wars maintain momentum. This coming week should be more eventful though, particularly Wednesday through Friday. There's nothing scheduled for Monday, but we do have the consumer confidence figures on Tuesday. But on Wednesday, we have the ADP employment report, expected to produce 110,000 new jobs for April. And we have Q1 GDP. The markets are expecting it to come in at 0.4% compared with a prior 2.4%. Not looking good. However, the more important announcement relates to inflation with the publication of the PCE index. Analysts are expecting the year-over-year rate to fall from 2.5% to 2.2%, and the core year-over-year rate to fall from 2.8 to 2.5. If this happens, we could see the prospect of lowering rates occurring in June again. This may reappear. But if it doesn't happen, then this will be frustrated until later in the year. On Thursday, we have final manufacturing PMIs for April, and a decline is expected. And on Friday, we have the non-farm payrolls, or the US payroll report, and we're expecting for April 130,000 new jobs to be reported, compared with 228,000 in March, but that March figure was much unexpected. On the geopolitical front, the demise of Pope Francis was announced, and our sympathies go out to all Catholics. And it'll be interesting to see who is eventually elected the new Pope. Attending the funeral, President Trump had a one-on-one meeting with Ukraine President Zelensky as the Vatican Basilica attempts to encourage a Ukraine peace settlement. So why did gold prices fall 2% on Friday and well down on Tuesday's high? Well, the main reason was the easing US-China trade tensions, and a stronger dollar pressurized the metal. Beijing has begun exempting some US goods from its 125% tariffs, which sparked optimism over a potential trade thaw, weighing heavily on safe haven assets like gold. Technically, gold may have to hit 3,350-ish to give signs of a continuance of the upward momentum. So we may see a short period of consolidation. But if the inflation figures are far from anticipated, then all bets are off. Silver will of course perform well if there is no recession on the horizon, and if the tariffs do not adversely affect international trade. With that in mind, if silver falls to $32.63, it may then further decline by around another dollar to $31.60. Failing that, there may be some upward momentum, though, towards the $34 level and beyond. So, with all this in mind, our forecast for gold for this week ranges from $3,260 to $3,360, with $3,220 and $3,420 as outliers. Silver we expect to trade more or less between $32 and $34, with $31.50 and $34.75 as outliers. But the inflation data is key. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you give this video a thumbs up, subscribe, press the bell sign. Have a great, enjoyable, and prosperous week ahead.